Well, hi folks, this is John Maxson, CEO of Beacon Capital Management, and today we're going to be talking about a very important topic relative to your retirement and pretty much everyone's retirement that's out there. We're going to talk about retirement income planning. And income is kind of the new buzzword for retirement, and that's because retirement has changed so much over the years. You know, the boomers are now retiring in America, and it's a demographic shift of approximately 70 million people that are retiring at about 10,000 a day. And one of their biggest concern, if not their biggest concern, is am I going to have the income in retirement to support my lifestyle? Now, when you think about that, folks that work as hard as you have for 25 or 30 or 40 years and tuck money away for the future spend the latter years of their life worrying about whether or not they're going to have enough. Now, when you think about the baby boomers' parents, they never had this issue because they had pensions and they had Social Security that actually got a cost of living adjustment. But much like many other things in the economy and in the markets today, many things have shifted. And this is a key issue that you really need to have a high degree of confidence that this is taken care of for you and your family as you enter into retirement, and specifically if you're in retirement. So that's what we're going to talk about today. So let's talk about retirement income planning. And what we say at Beacon Capital Management is that everyone in America that is retired or close to retirement is building a financial house. So we've got a picture of a financial house here, and there's really three levels. The foundation of your financial house, which obviously if you think about the imagery of a house, you want your foundation to be rock solid. And the rock solid foundation of your retirement is going to be the income that you need to support your lifestyle. So how do you do that? Well, let's talk about that as Social Security being the cornerstone. One of the things that we find in our practice is that most folks take Social Security for granted. There's over 2,700 rules that apply to how you take your Social Security. And not in every case, but in many cases, folks today are not truly maximizing Social Security. And this is not an entitlement program in our opinion, it's actually an asset. If you think about it from this perspective, throughout your entire working career, you put in 6.2% into the Social Security system of your annual salary every single year. And then your employer, the folks that you worked for, put in an additional 6.2% a year. So if you add that up, that's a 12.4% investment every year, the entire time you worked, that was going into Social Security. And Social Security for most people in America is going to produce somewhere between 20 to 30% of your retirement income needs. Now, if you look at it from this perspective, if Social Security brought you and your family $30,000 a year, you would need $500,000 in a bank account making 6%. And we all know that's not going to happen today with today's interest rates. But you need $500,000 in a bank CD producing about 6% a year to get $30,000 a year of guaranteed income. So the cornerstone of your foundation starts with the choices that you make on Social Security, which can be very, very complex. And how you take Social Security can reduce the amount of money you get from Social Security, and unfortunately, if you're not careful, it can dramatically increase the taxes that you're going to pay on your Social Security and not make it as efficient as you need it to be and you want it to be throughout retirement, which, folks, can be a very long time. People are living much longer today. So one of the things that we want to do at Beacon, and we do with every person that comes in here, is we have a detailed income plan that absolutely starts with your Social Security and making sure that we're getting the most out of that for you and your family, the most out of this investment that, again, 12.4% was put into for many, many years. So we start with Social Security being the cornerstone. And I talked about for just a couple of minutes ago that for the boomers' parents, they had what we referred to as a three-legged stool. They had Social Security that actually got a cost of living adjustment, and Social Security last year got a cost of living adjustment, and that was a good thing. However, if you looked at your Medicare premiums, the increase in Social Security last year was essentially wiped away by the increase in Medicare premiums. So there's a cause and effect to this. But your parents had Social Security that actually got cost of living adjustments. They had an employer pension, probably no debt, and they had savings that actually they could put into a fixed instrument and get a reasonable rate of return. Again, these are not the days that we're in today. Now, if you're fortunate enough to have a pension, once we have Social Security figured out for you and your family and we're maximizing that asset, then we want to make good pension choices if you're in this camp, which unfortunately for many people, because pensions have gone away in America, that's few and far between. So what this translates into for the average couple in America today is that you will experience what we call two income gaps. Now, income gaps are really simple to understand, and here's what they are. The average couple, again, experiences two income gaps throughout retirement. The first income gap is when you first retire. And an income gap, by definition, is just simply the difference between what it costs to support your standard of living and what you get from guaranteed sources like Social Security and pension. So, for example, let's assume that Social Security brings your family $3,000 a month and you're blessed and you have a pension that gives you $1,000 a month. So you have $4,000 a month from guaranteed income sources, but it costs you $6,000 a month to support your standard of living. Now, what that means is you have a $2,000 a month income gap between what you get from guaranteed sources and what you need to support your lifestyle. Now, I don't know about you, but I don't want to work an entire career and then take a bunch of risk with my retirement income. I want to have some certainty. I certainly want to have a calculated plan that's going to come in and fill this income gap. It's not that there are no risks, but I want to limit those risks as much as possible. So when I'm doing an income plan and we maximize Social Security and then make wise pension choices if you have one, I want to make sure that a client, folks just like you, have that income gap filled with guaranteed income sources, and there are some great ways that you can do that. Now, let me talk really quickly about the second income gap that most couples in America today are going to experience, and that is at the passing of one of the spouses. Now, if you think about it, when a spouse passes away, for most couples in America, they're significantly older. What happens is one of the Social Securities goes away, typically the lower, and if there is a pension, it can be reduced, in some cases eliminated completely. Now, one of the common misconceptions I hear from couples as we do income planning for their family, not just today, but 5 and 10 and 20 years from now, is, John, when one of us does pass away, you're going to have one less individual in our house, so costs should be less. Folks, I don't know that that's necessarily true, because that could be 20 years later, and now we've got to consider the effects of inflation. Costs for goods and products and services 20 years from now are not going to cost you less than they do today. And as people age, they typically run into healthcare issues, and not necessarily just long-term care, just healthcare issues in general. And when you look at healthcare today in America is going up about 4.5 times the rate of normal inflation. And of course, at the later years of life is typically when we have healthcare issues that need to be addressed. So I wouldn't agree necessarily that in this second income gap that costs are actually going to be less. In some cases, costs are going to be equal to higher. The point is you want to plan for that. So I want to have an income plan that literally understands these income gaps, and I have a written plan that fills these income gaps for 5 years and 10 years and 20 years, so that I can have confidence and peace of mind that I've got a plan that to the highest degree possible, we have eliminated risk and things of that nature. You can never totally eliminate risk, but you can have a well thought out plan where we're able to address as many risks as possible. Now, how do you do that with different options? The fact is, folks, that when it comes to investments, there's many options that are out there. In fact, there are thousands. And when we look at investments, whether it's things like stocks or bonds or ETFs or mutual funds or real estate investment trust or structured notes, there's all kinds of things. Again, there's thousands of them. What's going to be right for you is not going to be what's right for your neighbor. And investments really and truly are nothing more than tools. There's really not a wrong or right tool. The investments, or the tools if you will, become wrong if they don't fit into your personal investment objectives and goals to fill these income gaps. So what you want to do in these cases is sit down with a financial professional that will give you both the cause and effect. What are the possibilities and the potential, and what are the risks within these investments that I put together to fill these income gaps? And there's dozens and again thousands of different investments that should be customized to you and your family. But I will tell you this, When you go through a process like this and you maximize Social Security and you make wise pension choices if you're fortunate enough to have that, and then you have a very detailed written plan that fills these very real income gaps that you're going to face at this point of your life, and you know that this has been addressed, it gives you a lot of peace of mind that most people are looking for, but very few people find. And I just believe fundamentally that when you are going to entrust the rest of your life money to a financial professional that you're working with, that these are very real issues that need to be addressed, that can be addressed for you and your family.